What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. Before we get into today's news, I want to take a few seconds and acknowledge the channel growth these past couple of months. We are now a little over 1,300 strong, and that in itself is amazing. To keep this momentum going and help the YouTube algorithm bring this content in front of even more people, let's aim to get at least 1,000 views on each video, right? So that's the goal right now. Thank you for your support. And with that, let's get into today's content. So Virgin Galactic, right? Despite sliding to a new all-time low of $1.33 this week, the stock did manage to recover and post a weekly gain of 3.50%, closing at $1.48. The new low comes on the back, of course, of the lawsuit against Virgin Galactic by Aurora, which is a subsidiary brand of Boeing. And so in today's video, I'll go over the latest details around this lawsuit and how it could impact Virgin Galactic, then take a look at analyst ratings in the overall stock ownership distribution. Some interesting things here to note. I'd recommend sticking around for that. And I'll close with where I stand as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I'll be sharing. Drop the video an early like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. All right, well, like many of you, I've been waiting on some news on Galactic 7. When is the flight? Did all the repairs wrap up as anticipated with the FAA clearing Virgin Galactic? But instead, this week, we received the shocking news that Virgin Galactic is being sued. And to make matters worse, it is by Aurora Flight Science. If you recall, they had signed a partnership with Virgin Galactic back in July of 2022. The goal at the time was to build the next generation motherships, right? They had 2 planes in their contract. In the original press release, Michael Colglazier, Virgin Galactic CEO, made the following statement, and I quote, "Our next generation mothership are integral to scaling our operation. They will be faster to produce, easier to maintain, and will allow us to fly substantially more missions each year." End of quote. These 2 new motherships were said to play a key role in the 400 flights per year goal Virgin Galactic is trying to achieve with the Delta fleet, right? Now, at the core of it, they need these extra motherships to take full advantage of the scale that comes with having multiple operational Delta ships, right? So you can see how this could be problematic. Now, the initial agreement was intended to have Aurora deliver the first 2 motherships in 2025. Timing-wise, it would have aligned near perfectly with the Delta-class timeline for ground testing with commercial flights starting in 2026. Allegedly, once Aurora began working, they realized that the earliest they could deliver the first mothership is 2027. That's a problem, right? But not just that, it would cost twice as much. The main reason being that the existing documentation for the design of the Eve mothership was lacking in specificity. And as a result, Aurora needed to do more reverse engineering than expected to advance the design of Eve's replacement. The initial assessment wrapped up last year in May 2023. According to this lawsuit, Virgin Galactic did not like the extended timeline or the increased cost, and so they refused to pay. That's again what's being alleged. The claim is that this is the reason Virgin Galactic shifted its focus to the Delta class and is putting more focus optimizing VMS Eve. There is also talk of proprietary engineering formulas that allow Boeing, or Aurora in this case, to create industry-leading modeling equations for aircraft performance. Those apparently were passed on to Virgin Galactic by accident. Okay, well, that's interesting. And according to the filing, Virgin Galactic has refused to return or destroy the information despite Aurora's request because they believe they are entitled to it. Now, Virgin Galactic is currently on the hook for $26.4 million in invoices. They, of course, claim Aurora isn't right and have decided to fight the lawsuit. Now, the way I see it, given Virgin Galactic's current cash reserve of nearly $1 billion, it would have been easy to settle or pay up, right? But Virgin Galactic is doing neither at the moment, which probably means that they believe they are justified and they can win this lawsuit. The risk here, of course, is that they might lose, and they would not only be liable at that point for the invoice cost, but also any fees that have been incurred related to this since last summer. Beyond the monetary impact, losing this lawsuit could also tarnish Virgin Galactic's image. That said, the biggest impact near term, all the way until a resolution is reached, is going to be the additional risk that investors may not want to deal with in the event that Virgin Galactic does lose the lawsuit. This means that more investors could bail out, leading to an even lower stock price. Now, in addition to investor sentiment, the other variable to consider is how analysts view the stock, right? So far, there doesn't seem to have been any negative impact. The overall consensus rating is still a hold, which is unchanged since the last time we spoke. We still have 6 ratings, 1 buy rating, 4 hold ratings, and 1 sell rating. But interestingly enough, even though the high and low end of the range remain unchanged at $4 and $1.75 respectively, the average consensus price target has once again increased from $2.56 to now $2.81. This implies an even greater 89.86% increase from the current level and nearly triple when we hit the top end of the range. Assuming that analyst outlook does not deteriorate over the coming weeks or months, what this is telling us is that maybe, just maybe, selling on this news is a bit overdone. Now, the other interesting factor to take a note of here is the current stock ownership distribution. We're currently sitting at 17.09% held by insiders, about 37.38% held by institutional investors, and the remaining 45.53% is held by retail investors like you and I. Now, what makes this interesting is when you look one layer deeper, specifically at the insider ownership. This month of March is the first month going back to September of last year that any insider have purchased shares of the company. Now, up until now, all they've done was sell, and you can see that on the graph here. Now, to be fair, one data point isn't enough to draw any type of conclusions, but it is interesting nonetheless to see some buying with the stock hitting this new all-time low. And so really the question that I ask myself is, has the stock finally become cheap enough that they're willing to load up, especially if they're confident in the ability to turn things around? So, as I told you before, tracking the buy and sell activities from the insiders can be a strong indicator of confidence for the future of the company, or the opposite, right? And so what do I personally make of all this, right? At the end of the day, what does this mean to me? Well, even if we were to consider a scenario in which Virgin Galactic loses the lawsuit and has to pay up to $50 million, right? Double it up, let's get crazy. It still would not change the overall cash burn trajectory if everything else stayed equal. Essentially meaning that I still expect Virgin Galactic to have to do at least one more cash raise as we get into late 2024, early 2025. Why would that be? Well, because with their current cash reserve, it would be cutting it way too close, or they simply would not make it. And this $26.4 million or 50 to 60 million, depending on how you want to spend this, win or lose does not change that fact. And so the bottom line for me is this: Virgin Galactic isn't yet at a risk of going bankrupt. By the time they need to raise more capital, either through share offering or straight debt, interest rates will be lower, which will make that prospect even easier for them. And if they're able to push through, get the Delta fleet built out, and start flying at a regular cadence, all of the debt they would have incurred to reach that level could be paid back in a relatively short amount of time. We still have a long way to go here, right? So we have to be realistic, but I clearly still believe that Virgin Galactic can cross a chasm and reach profitability on the other side. But let me be extremely clear here. Virgin Galactic isn't the biggest position in my portfolio. And even though I'm continuing to grow my position, as you can see with these multiple buy transactions throughout the month of March, I am not doing so at the detriment of other positions I'm confident will yield better returns near term, like Riot or Mara. Now, the last thing I will say is this: Virgin Galactic could very well fall as low as $1. And I actually believe that we just might, given how close we've come already. For the next few months to a year, I do not expect Virgin Galactic to climb to $10 or greater. Now, it could happen, but that's not my base case. But I do expect it to have runs of 20% up to 100%. So buying shares near $1 and taking advantage of this $1 to $2 trading range can still be a solid play. I can still make some gains while I wait for the stock to make a full comeback once the Delta class is ready for commercial operations. This also means that if Virgin Galactic does indeed go bankrupt come 2026 or sooner, whatever it might be, because they failed to execute, which we haven't seen that, again, I don't expect that to happen, but just making the point here, If I'm using this trading range and trading in and out while maintaining a core position, I didn't lose all my money because I simply held and it all went to zero, right? The bottom line and what this all comes down to is risk management. I will say that being a long-term investor and trading on short-term positions do not have to be mutually exclusive. That's exactly my strategy going forward at this point. But on that note, that is it for me today. If you found value in my content, click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and possibly during the week for an extra one. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.